Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday, and it's July 28th month. We're about to finish up this month. This is definitely going to finish up the week, and actually this will finish up our chart lessons for the month. We'll have another trading day tomorrow, and I believe the first will be on Monday, if I'm not mistaken. So I believe this is the last trading day of the month. I haven't. I may be off by a day or so there. Forgive me if I am, because I'm just recalling by memory. I don't feel like looking it up. But interesting day today. The last 2 days, the market has really rallied. Once we went past this measured move here, you had to assume that our next target was um, a measured move based on the width of this range, which we did find some resistance there. But before the day was over, we traded right on through that. So now we've retested this breakout area here. Notice when we came through, we never came back and tested that. And that's what this actual price action is here sideways, is when we came through when we broke through the lows of this support, we came back and tested it a few times and it held before it went lower. But you also have the trend line there too, so it gives it a little more, resistance there. But if we continue higher, this will be our next target. To test this breakout area again here, and maybe the highs of this little congestion area right here. Really what you have is you have a little range right here, and it's not drawn on here, but I'll put it on here just to make it a little, I'll make it blue just so it sticks out, but you can see that little range there. And so we tested that. It looks like we're turning down, but the way the market's been lately, we could trade way down here before the day's over. Tomorrow I'll be back up here. And that brings up another point. Well, anyway, I'll talk about that on the next chart. But anyway, the chart is still saying we're going to retest these lows. I see nothing to say anything against. Now, if this thing just keeps trending higher, I mean, maybe we've got a bigger channel here. This is just a short-term channel, and maybe there's a bigger channel here that looks something like so. We can't rule that out yet. So the chart could change on us. Maybe we get in this channel and we keep going for a while. But I can tell you the first break of this channel is right here, and we've pretty much got two legs, measured legs up and a bit more. So we could turn down here. I would still say at this point I'm expecting prices to retest this low. Now, it may not happen. The chart could change. And sometimes we get it wrong, and sometimes the chart doesn't do exactly what you expect it to, but 90% of the time it does. Just like when I was saying we would retest this, and it didn't look like we were going to when we were trying at the end of this day, but guess what? We bounced right off of that and went back and tested it. Closed below it, and then we continued higher. We tested this, and we actually closed above it. So we could run on up and test this other, or maybe test the highs of this right here. We'll just have to see. So that's going to be our next targets. I mean, we're severely overbought now. You can see we're even above the brown, and so we're severely overbought. So I'm guessing we're going to, at some point, this thing will turn down and probably rocket down, and we may rocket all the way down here and test these lows again. We'll just have to see. But there's nothing here yet that's saying, hey, we're not going to retest these lows. Maybe we have a channel setting up here, this green one. Maybe we need to give it a little different color. Let's just make it cayenne. If we come back to this trend line and bounce again, then we'll know it's valid. If not, prices may shoot right through it and go on lower. So we'll see what happens. But let's flip over to the intraday chart. Okay, this is the way I see the intraday chart. I see it as a trend up, sideways, another trend up, sideways, and then a third trend up. And then we've been selling off. So this could be the final Yahoo to the upside, and now we may turn down. We'll just have to see. But I did want to talk about this. Somebody posted something in the forum. I always say you never go into the next previous day's price action to start your channels and your sideways action and all that. I always start in today's price action. And somebody posted I started in the previous day, but I didn't. I think what they're misunderstanding is the market right here. This red line, this line is the break. So the market on this is third. Every bit of this is Thursday's price action, and it started at 5 p.m. yesterday afternoon, and it ended at 4 p.m. today. That's the trading. It's 11 hours a day in a trading day, and so yesterday's market closed at 4, and so Wednesday's market went from 5 o'clock Tuesday afternoon until 4 o'clock yesterday afternoon. So make sure those are just basic things you should understand. But from 5 o'clock to about 8:30 is considered overnight trading, or the night session. And then the regular session is what we have white that opens up at 8:30, and it actually would go to the 4 o'clock close, but I have it turn gray again at 2:30 because we don't trade after that. So it just shows me the cutoff period real quickly and easily. But yes, today's trading, Thursday's trading started at 5 o'clock on Wednesday afternoon and ended today at 4 o'clock. Today, Thursday at 4 o'clock. So make sure you understand that, because if you don't understand that, you're going to be really thrown watching me draw and we use the 24-hour chart. So we use all the data from 5 o'clock Wednesday afternoon to 4 o'clock today for today's trading. And tomorrow, this is where we open back up at 5 o'clock. So all of this is Friday's trading. This is considered, if you started trading right now, you're trading in Friday's chart, Friday's data. So just understand that. Don't get confused there and throw yourself off. But anyway, let's zoom in here, go through the trades, and wrap this day up. And I did mark out this little blue area right here. There was a 7:30 a.m. GDP, and these have been having a little bit of fireworks lately. It's not that big a deal. I marked it off just that little 10-minute window or so where it kind of went haywire for a few minutes, and then it kind of settled back down. So it actually moved a measured move and made a double top and gave you a lower high right here to ride back to the EMA. So that was a pretty good setup. But so anyway, we didn't really get our first trade till almost 8 o'clock. And you can clearly see 2 legs up, a perfect measured move. This this dashed line right here is equal to the width of the original range, and you get this lower high. I like riding that back to the EMA at a minimum to ride it back to test this breakout, and it actually goes back in and bounces. It looks like there's maybe a trend line right there, and we turn higher. Unfortunately, you don't get a real good chance to enter this. There is a second entry here. It's right off this green trend line, so maybe you take that because you're expecting prices to come back up here. But even then, you see we don't quite make it back up there, and we turn down, and then just the bottom falls out of it. So it looks like this might actually be an overshoot, and maybe it's more like this. And you can kind of see the midline does fit a little better there, and that would explain why we don't get a retest of a new high here. It just, we had an overshoot and it turns down. And this kind of thing will just throw people completely off, and they're like, well, how do you know it's going to go lower? Well, because I drew a trend line down, and now we're below the EMA, and you notice I don't have a trade till then. Until then, you do nothing because it's really hard to know what's going on there. So you just sit and wait until it's obvious and clear, and then you trade again. And that's what people have such a hard time understanding. You aren't looking to take a trade on every swing and every bar. You're waiting on things to happen, and if they don't happen, you just sit tight until it's clear what's going on, and then something happens and you start trading again. So as you see, we went from 8 o'clock to 8:40 before we took another trade. Maybe you took this one, so maybe there's one in there at 8:30. Um, but yeah, I think that's an overshoot in the end. It was hard to know that until after the fact, but it didn't matter because you just don't take a trade. I mean, there's no real setup here off the key entry point here. It doesn't set up the trend line, it just turns down, and then you draw this trend line. You confirmed it right there. You might have entered right there, um, but I didn't mark it that way. I treated this as a first entry, and that one tick just kind of, this is like another leg down, and then the second entry. But technically, that's where, if by the breaks, that's where the failure happened. So you could have even entered there. But that one tick, and that being an engulfing bar, I kind of like to wait. And then really you get a triple test on top of that. You could call that a triple test. Just draw your line across there. And you can see we came up once, twice, 3 times. So there's reasons to take either one of them. And we turn down again here, and that's just a lower high. It's way too far, and it's too far away from the EMA. And then there's no other entries down here. And then you come back and you get a first entry, and this breaks higher and turns down. You get a second entry. If you wait for this bar to close, you can't enter on it. But when it broke higher and turned down, maybe you use that you enter that as an engulfing bar. And the only problem with that is you'd have to keep your stop way up here until this bar closed, which it wouldn't be long, and then you move your stop there. But you might, if it took on off up, you might risk all that. So I don't think you want to take that trade. But I marked it green just so we could talk about it. But I think it's something you got to skip, to be honest with you. So if you're going to play it by the rules on engulfing bars with putting your stop up here until this bar closed, and that's just a lot to risk. I mean, let's just see what it is. I mean, that's 5.5 points. That's $275. That's a lot of risk. And your gain would probably only be, let's just say you entered here and you got to ride it to one tick below the low. It's about a 50-50 risk. So maybe you take that trade. I think it's better off skipped. If you wait until you get a good signal bar and then it's an inside bar and you can't take it if you follow the rules. But anyway, we run down here, we make a new low. We get a first entry, second. This is a failure. Again, it was kind of an inside bar. Failures doesn't matter as much. I mean, that's another one you might take because that does close above the EMA, but it doesn't give you much room to that little double top, and I'm not crazy about it. Of course, then you get another failure, and this would probably be the better one to take, but now it's congested. And you can see it didn't take off until it came back again, and then it took off. And that's because the smart traders are leery of that congestion right there. They're not going, most of them aren't going to take it. They're going to wait for something better. And you can see it's not long before we've broken lower and turned down again. Nothing in here. It's just two sideways. Lower high here, but it's moved way too low. Didn't even get back to the EMA. But then you get a break and you come up here. You make a double top, and then this breaks higher and turns down. I like going short right there. You got them trapped right there. And so this market's still making lower lows and lower highs. This is just kind of a double top and then another lower high. So I'd expect another lower low there. And we do make another lower low. And then it's just kind of bouncing up. Now you can tell we're just kind of stuck going sideways here. So you got to be careful. There's a higher low here, too congested. Failure here. I don't really like going long into a triple top. It'd be tempting to short that triple test, but it never triggers. And then all of a sudden, boom, the bottom falls out. You get a lower high here, not a good enough signal bar. Then you get your failure right here. That's where I like entering. Boom, drop straight on down. I got the longs trapped. This move higher here ran all the stops up here and loaded up a bunch of longs. And then when this failed, the last of the longs gave in and the new shorts came in. And you probably got some more longs that came in here as well because of the second entry long and the nice signal bar when it's bounced down here a few times. But I think you're better off going short right there. And how would you know? only because it's a trap. I wouldn't want to go long right there. Even though there's a triple test, it's not very much room back to the EMA. It's just not high probability, but the trap probably will be, and you can see it. That's a good read right there because it rockets down. And then of course we bounce. Breakouts usually fails. But notice you get a second entry short here on a triple test, and we're still making lower highs and lower lows. And so I don't think you can turn that second entry short down right there, especially with that signal bar on a triple test. And runs down, makes a higher low. You might even consider going long there. If it had set up just above the EMA, I'd say go long there. But I think it's a little bit too early just yet. You could break higher, hit the EMA, and make another leg down. This thing takes off, though. Pulls back and you get a second entry here, but not a very good signal bar. You do get a higher low here, but that makes you have to go long right into all that resistance. And you can't risk that right there. It ends up taking off, but you don't know that ahead of time. Most of the time that will fail and turn back down. And we're moving along sideways here. There is a triple test here. The only problem is it's right into resistance. So I think you're better off skipping that. Of course, it does take on off. Now you've got some information. Hey, this is a pretty strong trend. I'll be honest with you, even that little bitty bar right there, it's 4 ticks. It's a second entry long. And the only problem is you don't really have the key entry point yet. You draw it from here, but it is right at the EMA. The problem is it closed below it. So I think you skip it, but because it's 4 ticks, you may risk that. And you can see it's looking like a really strong trend here. And of course it does bounce. And you get another triple test, although you do get a close outside this time. And this is also a second entry long, so I like that one and look at it go again. Then you get another second entry here. I don't think there's even enough for it to work there, but because of that trend line, I'd skip it. Yeah, you can see there's only like 5 ticks. That's been a failure on you right there. But look how congested that is. I think somebody posted this in the forum. They didn't draw this channel just right, and I think their trend line came right across there. But this was the proper way. This is how you would have drawn the trend line here, in my opinion. And you can see it fitting pretty well on both sides of the EMA and the trend line and the channel all the way up. And of course you finally get your close outside. It tries to go lower twice and fails. Go long right there. That's another trap. Comes back pretty quickly, but you don't want to go long there again, even though it fails. I mean, you could say, hey, there's a triple test there now, but you know, this looks like it's played out, well played out, so I think it's a little too risky. We run up, make a new high. I didn't mark this one. This is another one. There's a triple test there, but it makes a new high. It is a little ways away from the EMA, and it is a second entry short. It's hard to say that's a channel yet. It looks more like resistance. So if you took that, I'd be okay. But with it making that new high, I think you're probably better off to wait. Of course, it drops down. You get a close outside, and you get a second entry right there. But there's just not enough room to those lows. If you measure that, I think there's only like 4 or 5 ticks there. Well, it might be 6 ticks in there if I got that right. But that's just still really close. And here's the other part. If you draw this little channel, you're just kind of going sideways in congestion, and this could fail and turn up. So anyway, I think you're better off to skip that, because you don't know that it's going to break lower right there. You could get stuck right here. Hopefully that makes sense. But anyway, you fell out. You end up failing out the bottom, running back up, coming back, and then you bounce right off of it. And you could treat this like a failure. There's a first entry and then a second entry. It's a high or low. The main thing, it's a high or low. And it does bounce right off previous support. And so it looks like this is going to be a failed breakout. that ends up running all the way back to the top. No short because it just goes sideways. There's too congested. Comes back, gives you another bounce, and nice signal bar. Double bottom basically there. It actually makes a higher low here, but it's right into that kind of midline, and that could fail. I think and then you get a little reversal here, but then it's so close to the highs. So I think you really got to play the range at this point. No short here because the signal bar is a doji, neutral bar. But this thing keeps going, so the trend, the second leg is probably headed up, and I would at least measure this. I'd probably measure this all the way from here, even though really the trend started right there. You could measure it all the way from here. And I haven't even looked to see how close that came to the measured move. Funny, huh? Right there at it. So that, I mean, it would have been hard to believe you could get that target at that point, but there it is. I mean, almost to the tick. Stuff is scary. It's uncanny how accurate it can be. But anyway, we take on off, and again, this so much momentum, you just don't get a safe entry here. You get your first break. There's a, I think you could count that as a second entry right there. Let me zoom in. But look how sideways it is. That technically is not congestion, but it's just sideways, and it's halfway between the EMA. I'd skip that. Of course, it runs down here. I didn't draw this channel either. But there it is. You get a break, and you get a new low by one tick, and it runs up, makes a higher low, then it makes another low, which is basically a double bottom, and you get a good signal bar there. You got to have room to get out between here because look how many times you turn down. And then higher low here, but look, it closes right into that, and you don't know that you're going to push through, and it does, but it still struggles and if you entered, depending on how you entered it, you might have still got stopped out, so it's just not a good entry spot. Runs up, we get a failed breakout. If you got a really good signal bar, maybe you take that trade, but that's just too neutral. But notice it runs back into the EMA, the trend, the range. I can't even think straight today or talk straight, but it pulls back into the range and comes back and tests and it acts as resistance again, and so it's a lower high. It's moved a long way, but it's with it being back inside a range and testing it and being that bearish, I like going short there. You make another lower high here, but you can't enter there. And that really takes you into 230. And we're just going sideways here, nothing there. And I don't think you don't want to buy down here at the middle. So, because you would expect prices are coming here. So anyway, some pretty good trades today. Really big rally. Really, really big rally. Hopefully you saw my post on the how they write the news. Is a good today. I got that Yahoo. If you didn't go to the website, it's free. Anybody can read it. And look on the right hand side of the main page, and you'll see the post for the day. Most recent post down the right hand side there, and you'll see it. And I just talk about how they write the news to fit the price action. And it's just further proof. I mean, I've known it. Once I learned to read the chart and learn price action and see how prices do something, and they're expected to do something else, and then they write something to explain why it did what it did that day. But yet we might have known 3 or 4 days in advance it was going to do that. So it's obvious that news didn't cause it. It's the chart. It's what prices do. And so don't believe anybody that when they tell you that the news affects things, because I'm not saying it can't, but 90% of the news they write is written to fit the price action, and I know that for a fact. And so go read the article. It's kind of interesting that I wrote. I hadn't written an article in a while because I usually just don't have time, but I just thought that was really interesting and wanted to get it out there to people so they could see it in real time, almost happening in real time. And so hopefully you'll get a chance to read it and you'll see what I'm talking about. But I'm going to wrap it up. This is going to wrap up our week. No chart lessons on Fridays. We'll be back Monday. I'm done for today. This is Mac with with priceactiontrading system.com, and we'll see you next